All right. Hey there. Good morning, everybody. Christopher Inks with Texas West Capital coming at you live at, what is this? Just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 16th of May, 2023. Man, nice day outside for once. It's been raining a lot out here lately. Again, still trying to get used to that. But we're coming at you live here from just north of Houston, Texas. Near the water, but I believe those in some areas of Houston have been flirting a lot more with the flooding alerts and stuff down there. So we're doing all right here. How are you guys doing today? Excelsior, good to see you. Martin, what's up, man? Esteban checking in. Good to see you guys. Everybody else listening in. Again, it's so when you do this long enough, right, and if you do it correctly, you do it long enough. You can't sit here and do it incorrectly and expect to be in for 5, 10, 20, 30, 40 years. Not that I've been in 40 years, but almost 30. So, we're almost there. But the one thing you see again, over and over again in cycles is this inability of retail traders to flip from bullish to bearish or from bearish to bullish, right? A lot of what I teach is just understanding possibilities and how to position yourself for them properly with proper risk management. Because when you learn that, especially if you're a newer trader where you've got a lot of emotion anyway, that kind of helps you kind of curb a lot of that emotion that you have. Because then you don't have to think of things as bearish or bullish, which you really shouldn't, but people do anyway, right? I can make a post in social media and say bear or bull or bearish or bullish, and it gets a lot of attention. But if I just talk about, hey, here's the levels and whatnot, the drop off is just insane. So, again, when you're really trying to trade, guys, you have to understand that a lot of times you do yourself in, unfortunately, by using psychological terms that don't really kind of help you out any. If you're always thinking in terms of bearish and bullish, then you're always giving yourself an emotional side. If you just understand that movement is movement, and then movement moves between levels, then it kind of gets you off that, and you can start changing that a bit. But the difficulty comes at those reversal areas, right? So everybody was gung ho, laser eyes there in April of 2021. And we were talking about that doesn't have to be the top, but it's a top. And that was when it pulled back to our target area there. And then it rallied up, of course, after that, made just a slightly higher high. And then, the reversal coming down. And so now that we're here, we hit the bottom, guys, back. So accumulation has been going on since June. We've talked about that. And then we had that terminal shakeout in November. And that was the absolute low, right? And so we sit here now, and we're coming up, December, January, February, March, April, right? And then May now. We're almost 6 months into this, guys, into a rally that's taken us 100% off those lows. And people are still talking about it being a bear market rally, or about it being, just a bear market still. And I think the problem is because people are very emotional with their thinking when it comes to trading. And so there's a thing called recency bias, where you're kind of hugging, and you think, man, it's been 6 months, there shouldn't be any more recency bias, right? But people still are. We had a year-long downtrend, right? And people are still hooked on that. And a lot of those who are still talking about being bearish have continually moved up. They think, well, it was here, and then we went above it. They're like, well, here, and then we went above it. They're like, well, here, and they just kind of keep moving the goalpost. And so here's the thing, guys. At the end of the day, by the way, just so we can get this clear, you don't make yourself look really good when you jump out there and you immediately start putting people down. That's a real thing here online. I don't know, maybe because people don't have to put their names on there. They use farm animals as their pictures, but you do yourself no favors, especially when you're wrong. When you're talking very, which we tend to do as human beings, right? We talk very confidently about subject matter of which we have very little experience, right? But when you get there, you just, I guess what I'm trying to say, guys, is the less profitable, consistently profitable you've been, the more humble you should be, right? The more you should listen to those who've been around a while. It doesn't mean you have to instantly believe what they're saying, but man, oh man, if somebody's been doing a thing for decades, you should give them some sort of deference, some sort of, well, listen, I want to listen to you and see if there's something I can learn from this. But we don't see that online. We see people very confident, very sure of themselves, but they're wrong, right? And they're wrong again and again and again. They go back or they delete their tweets, they delete their replies, stuff like that. I guess at the end of the day, guys, do you want to be profitable? Do you want to learn how to trade, or do you just want to talk smack online? Because I'm going to tell you right now, you're not going to get very far as a trader if that's what you're concentrating on. You get out of life what you focus on. What you focus on. Focus means you're putting forth discipline, you're putting forth consistent effort, doing it correctly, right? These things, this is what you focus on is what you're going to get. So if you want to trade, and yet you're spending most of your time online talking crap to people, spreading memes, all these things, you're not doing the things you have to do. And I guess I bring this up because lately I've had more than a few, DMs and questions from people about, well, listen, my trading's struggling. I still struggle. What's going on here? I've tried this and this and this. And then we look and we find out, okay, well, they're not really focused. Now, people take that one of two ways. The first way is, okay, well, you're right. Holy crap. I need to focus. The other way, which more people than not tend to say, is, well, yeah, I'm focused. Yeah, I'm focused. And we've talked about this before. It's easier to say we're doing a thing than to actually take the steps needed to do it. Trading is not, it's simple. It's just not easy. And it's not easy because it requires all this discipline and focus and this commitment that most people just aren't ready to do, guys. Think about it. When you go online, think about it. How much time do you actually put into whatever you're doing? You scroll through YouTube videos, you watch it for 20 minutes, right? You guys may be different. You're here with me, so I get these longer ones, but you watch it for 2 or 3 minutes, right? TikTok explosion because 30 seconds, it's done, right? You get online on Twitter or whatever, and you just kind of scroll through the quick messages, right? There's no attention, there's no focus, there's no discipline, there's no consistency. And so these things tend to affect us in our lives. And so right now, we tend to talk a lot about trading because that's what we do here. And so I guess at this point right now, it's, are you listening right now? Are you truly listening? Or are you just hearing what I'm saying? Are you listening? Are you going there and going, okay, yeah, I see this. Okay, I need to do whatever ABC here to do what I need to do. Because if you're not, you're going to continue getting the same results you've gotten. And, at the end of the day, why waste your time doing it, doing it, right? Saying you're doing it, but not really doing it, and just wasting your money. That doesn't make a lot of sense, right? So I just kind of wanted to talk about that for a minute here because, again, I don't know. Some people, they just get to see me online and they're like, oh, just another paid group person or whatever. No, we're not. We actually run quite a, excuse me, professional service, right? It's a real company. We pay taxes. We abide by the laws. I'm a guy that's been doing this for, many, many decades here. It seems like anyway, again, I'm going to be 50 here coming up. Geez, I've been doing this since I was a teenager. So it's been a long time. But, there's you kind of get what you put into life. You get out of life what you put into it. And a lot of times we get in there and we stay busy just to stay busy. We say, oh, I'm so busy, but it's just busy work. It's not really accomplishing anything. And the same thing can be said for trading. So again, even if you get past the point, okay, you're like, okay, yes, I'm really working toward it. And you're not actually just saying it, you're actually doing something. Well, the next step is, are the things you doing what you need to do? Or are they just busy work? Is it really the thing that's going to get you beyond where you are? And so these are all the kind of things that you have to deal with when you start learning to trade. And a lot of people don't talk about this online because they don't know, guys. A lot of what you see online are just the people that don't really have experience. They don't really have time under their belt to really kind of talk to you guys about this. So hopefully you're listening here. Let me see here. Let me kind of catch up with you guys. Let me see who all's joined in here. I see Fadi. What's up, buddy? Bamboo checking in. Man, oh man, you guys, I'm going to tell you what right now. Bamboo, oh man, he's with us. He has been killing it the last few weeks. Holy crap. Man, I'm like just blown away. He's been with us for a while. And, part of being a trader is figuring out what resonates with you, right? And man, oh man, I think he's found it because, man, just absolutely killing trades left and right. Trades throughout the week. He's making like 4 out of 5 trades. He's profiting on, 2, 3, 4R, on his returns. I mean, it's just consistent. And so it's been fantastic to see that because that happens, right? When you put forth the consistency, the discipline, the effort, the focus as you need to, you're bound to have good things return. And he's seeing that. So absolutely fantastic. I had to put that out there just because, man, I've just been so blown away by the success he's had here the last few weeks, especially. Hey there, Andrew. Good to see you. There goes Bamboo right there. He says, what'd you say here? Would have gotten today 2 more wins for about 4.8R, but I didn't have time to trade, so I didn't enter, was on gold and silver. Yeah, absolutely fantastic. I'm telling you guys, I'm probably going to have to hire Bamboo here. I don't know if he wants to work for a bit. I don't know if I can force him to work, but or to work with me. But really just doing so great here. Bryce, what's going on, man? He says, can't believe April of 21 is 2 years ago now. I remember that like it was yesterday. It's crazy how fast time flies, right? It's crazy. Let's see here. Augustine, what's up, man? He says, retail almost always, retail in general, enter at the last time of the trade, in my opinion. For example, in crypto markets, when crypto Twitter is the most bearish or bullish, says a lot. Yes. And that's more than, guys, what he's talking about there is more than just, oh, my feed is bearish or bullish, right? So real quick here, let me pull this up. I've got this. The title for today's show is because I've got this particular thing that I wanted to show you, this chart here, okay? You may not understand what this chart is, but you're about to learn, all right? Let me see here. Where is it? Is it that one? Yes, it's that one. There we go. Okay. So let me kind of pull up this chart for you guys here. And so if you follow me on Twitter, right, you would have seen this post if you were paying attention. And so what this is this is your small speculators index position. So what this tells you is, as it shows here, it says small speculators loading up on short positions. And the level at which, notice that this level it's at down here, right? This chart here goes all the way back prior to 1990. Look at how short they are, guys, since 1990. Look at how short they are. Absolutely crazy, right? And so you can notice here that when they're short, you kind of get in those shorts, right? You get short and short. This was March of 2020, the COVID thing here. Here it is. And look at this. Look at this build up since we've been going down here. And more so, as it continues to rally, look, they continue to get shorter. Now, why do I show you this? Why do I show you that, guys? Because the market tends to punish those who get offsides. And offsides means when you are significantly, as a group, in one direction more than the other. So if you were following me back in January of 2021, when we had that bottom in the DXY, and I gave you a whole bunch of reasons for it. And one of the reasons I gave you was that dollar participants were net short. They were like 96% or 91% were short, right? And so again, very, very offsides. And I said, among other things, that was the reason why I felt like it was the bottom. And then we had the 114 to 115 target. And so, yes, it was the bottom and we did get the target. Man, I'll tell you what right now, there's no guarantees, obviously, but holy crud. To be that far offsides, by far the furthest offsides in over 30 years, and you expect it to go down, the market tends to punish those who are severely offsides. And so just kind of pay attention to that. That's something you should be watching because, man, oh man, what are you going to do, right? You don't want to be jumping in when everybody is feeling the same way at an extreme, right? And that is very much an extreme, as you can see in that chart. So, do with that information what you may. That is stocks right there. You can look at this on the COT report, the Commitment of Traders report. You can find information like that. You can see how your pros or your retail is doing, how they've changed week over week, stuff like that, and trending over time. So yeah, you can do that. Let me see here. What's going on, Spiral Architect? Bamboo says, coming over here says, what'd you say? I listened to Chris now for over 2 years. My trading has become what I was wishing for when I started. I can only recommend anyone that wants to learn trading to join Chris. Best decision I've made. Man, I really appreciate that, man. Again, I do what I do. I can't guarantee that anybody's going to have any certain level of success because so much, it's not dependent on me. All I can do is talk to you, show you the proper way to do things, explain why things are the way they are. But ultimately, the determinant of your success is you. Are you at that point open and ready and willing to listen and apply the things I talk about and then put in the work consistently for it? If you're not, it doesn't matter what I'm telling you. You won't get the results that you're looking for. But right now, anyway, guys, we've still got this code out there. It's Elite CDMM, and you can go to texaswest.capital, our membership site. Normally, our monthly Tier 3 Elite level is $199 a month, but that code right there will get you $50, will get you $149 off each month for the next 3 months. So you only pay $50 each month for the next 3 months. You can cancel at any time. If you do it 1 month, you decide that's it, that's fine. But you can do it for up to 3 months. And then the 4th month, the full price kicks in there. But you know me, I'm usually, if people are jumping on deals like this, I usually tend to give them other great deals along the way. The idea is, listen, you're making a decision. The first step that you say, okay, I want to actually become a profitable trader consistently is I got to do things I got to do. And usually we don't know what we don't know. We don't know where to start. That's how you do it. That's your first step right there. You jump in there, you do that. I reward you. That's how it works. Because I hope that by rewarding you for doing the right things, it'll make you want to do more of the right things. It's not that you can't learn to trade on your own. A lot of people lack the discipline and whatnot to do it on their own, but you are going to find a lot of half-truths and outright lies there for free on the internet because it's for free, right? They have no reason to make it any better, right? There's nothing backing it. With me, it's my reputation, it's my company on the line. So we really go out there like I do here with you guys when we're talking here, really try and make things make a lot of sense and be as honest and as truthful as the day is long, right? So yeah. What'd you say here? Oh, I got like great comments this morning here. Augustine says, when I got in focus was when I got into the last $3,000 to $4,000 in my account, starting from 25 to 29,000. It looks like, and then I got serious about my stop loss, risk management, and exit, etc. Sometimes plain, it's the best teacher. Yeah, again, guys, my story, right? I've told you about that. Took me years to actually get serious about being serious, right? I talked about it for the first 3 years or whatever, 4 years of my trading. I said I was a trader. I said I was serious, but I wasn't doing the things I had to do. And so, I kind of got to the point where I said, well, listen, I can't keep losing money here. So I either have to be like legit serious instead of just saying I am and do the things that I have to do, or I just need to stop. I didn't want to stop. I didn't want to work for somebody else. So I got serious. But we all kind of get to that point where we decide where we're at, right? It's not always easy. Marcin, what's going on, buddy? I love seeing you checking in, man. Hank checking in here as well. Y'all been following Hank? He's had some pretty good charts. Follow him. What is post your Twitter handle in there, man. I can't ever remember what it is. Mark Shinar, what's up, buddy? He says, I heard Bamboo was looking to adopt me. Good times. Jonas, what's up, man? Deadly123 says, wishing everyone a great day. Good to have you here, man. Oh, Chad, Bamboo had a setup this morning. He says, got the gold with Bamboo setup this morning. 4.4R. Fantastic. I love that. Good to see you, Frank, always. Let me see here. Michael Johnson, what's up, man? He says, do you think that it's due to the availability of being able to be short? In 1990, I don't think I, as a retail trader, could easily have gotten into a short position. I mean, there is some of that. Obviously, technology and the way markets work today, and what, the law, the rules, and whatnot allow, right? There is some of that, but not to such an extent, right? Because if we look at that chart, remember, we look at this chart here, you can see the 1990 was significantly higher up there, right? And so you can see a big dip down comparatively there right around 1995, right? But the significance now is here. And so the result is that you should expect an even stronger reaction to that, right? So yeah, you have the ability to go short. So you have a lot more short pushing down, pushing down, pushing down. But that doesn't remove the reality that when you get so far off sides, the market tends to punish you, tends to bend you over and spank you, and not in a way that some people may find enjoyable, right? So yeah, I definitely think that's part of it for the depth of how much short they are, but the fact that they are so short overall should see we usually expect to see the market react in the opposite with it. Remember, guys, as retail, you're rarely correct in the grand scheme of things, right? Your liquidity, your money in the market is what the bigger players use to advance price or to decline price, right? And this is a big concept because nobody wants to believe that they're liquidity, that they're just pawns in the bigger game, right? But as long as you continue to trade the way you've traded, right, and you get those same results, you'll continue to be liquidity. It's when you start learning how the markets actually work and why they do, and you learn things like Wyckoff and Elliott wave, and you start into things like K waves and stuff like that, and you meld all this together to get a real understanding of what the market is doing, so that you can forecast it. You're going to find a lot of times that you just end up as liquidity, right? Um, Augustin says, I'm surprised so many in the short side. It's kind of obvious that they're going to raise the debt ceiling, print more money soon, and stop the hikes. Well, yeah, they're going to. They're not just going to let things just roll over and die. Everybody's playing a big game. Oh, we're going to hold off. We're going to hold off. Republicans are like, no, we're not going to raise it like that. Democrats are like, oh no, look it's all your fault. But the Democrats aren't saying, well, we'll pull back our spending either. And it gets down to the last minute, and these idiots all get together and go, okay, we'll go ahead and do it. It's just a dumb game, guys. It's politics, but they'd be stupid to allow things to roll over and die, and they're not going to do that, because what does that say about them, right? All of a sudden, that puts them in the crosshairs of their constituents and everybody else. And I don't care how much you think your people love you, put them in a bad position. You can try and blame it all day long, the other one, and you'll get some people that'll follow you and you follow what you're saying and believe you, but a lot of them just be like, hell no. And nobody wants to take that chance, right? What's going on, Sylvia? No, sir. Silvio, no, sir. It is, the rain has actually stopped today so far. So this has been a nice day here. I had the top windows open, and when I went to do the stream here, I noticed it was too much light coming in. So I had to scroll up those blinds there. Those are those double pane windows that have the blinds in between them. So you just kind of hit your little scroller on the side, and it opens or closes them. But yeah. Cecilia, good to see you checking in. Nice guitars in the background. I think so as well. I love them. Data, good to see you here. Hank says, here, if you guys want to follow him there on TradingView, there is his handle, HTLTIMOR. Again, guys, he's had some great charts. He looks at a lot of stuff, but, and he'll tell you, just like I'll tell you, never follow charts blindly. I don't care how many times somebody has been right in the past. They can always be wrong on the next trade, right? So your best bet is to watch the charts and then start trying to learn how the market's moving and how things are going, and then see if that chart kind of aligns with what you think is going to happen. Or if it doesn't, it gives you maybe a reason to look at something and go, okay, well, maybe I'm not going to be right on that. So yeah. Let me see here. Ryan V, what's up, man? Could you see a scenario where shorts start to feel comfy right before getting punished? I think they're feeling pretty comfy right now. Um, so another thing, guys, is when it comes to macro, stop listening to people online. Okay, stop listening to the experts. Most people that do macroeconomic forecast based on fundamentals, so think government numbers and stuff like that, they have a bias. And what they end up doing, whether they recognize it or not, is they use that information that's coming in to create a narrative that supports their bias, right? So, you know me, I talk about macro a lot, but I don't do it from the fundamental part of it. I do it from the charts and back into the numbers and fundamentals and stuff. And if you guys been following for any amount of time, you know I'm usually exactly right or really pretty close, right? I'm usually off by just a real tiny bit. But that's because I start with the charts, with the way that I understand charts, which means the way that I understand society and markets and everything. And I take those and then I back into, here are the numbers. So what can we maybe look for? Again, doesn't mean you'll be right 100%, but you know, again, guys, you've been watching everybody talking about this, and that in the economy for a year and a half now. It doesn't happen, right? You listen to government talking about interest rates and all these things. Hasn't done anything that says it's going to do, right? Generally. But it's pretty much stayed in line with the things I've said, right? We're talking 6 months, a year out prior, right? So, you know, again, it's the great thing about this is it's not something that you can't learn. You can definitely learn to do this. By the way, guys, we're actually going to do something I've never done before. We're going to do a 5-day challenge coming up here probably in the next few weeks. So be following along with me. Send me an email at contact@texaswestcapital.com or send me a DM on Discord or, you know, pop a quick reply or a comment to me on Twitter. Let me know if you're interested in me letting you know when that's going to go. It's free. It's 5-day free. You'll learn a lot about trading and markets and forecasts and stuff like that. But we're going to do that. And so if you want to be a part of that, do it, because we're only going to be limited number of seats. So I can't promise that, you know, if we get this big return that everybody's going to be able to get in. But those who let me know first I'll let you guys know first as we kind of release all that to do it. So, but anyway, I think that's going to be exciting. It's going to help a lot of people out, I think. At least start getting going with the stuff they need to know, right? John Andrews, what's up, man? Can't wait for the jam session. Oh, you're talking about the guitars? Maybe one day, guys. Maybe, right? Let me see here. So, okay, guys, let me kind of jump on here. Again, you can jump in with us right now, $50 a month for the first 3 months. Elite CDMM. You see the on the screen here. You should see the ticker at the bottom. Geez, oh whiz. And like I said, you can stick in for 1 month or you can do it for 3 months. And you don't pay it all up front. It's just $50 a month at your each renewal there. And like I said, the 4th month, then it'll go, you know, the full price. But knowing me, I'll probably give you some stupid deal anyway. Just because you stepped up and you actually did the thing, right? You did the first step, was jump up there, go, okay, I'm serious. I'm going to jump in there and start learning. Let me see here, guys. What do we got as far as charts? You guys want to see some charts? You guys want to see some charts? What do we got as far as charts? Let me see what I've got here. Ba-da-ba-ba-da-ba. Oh, man. It's always, I've got so many things open all the time. I always have to take a minute to figure out where in the heck I am with my charts. Let's see. Where's my Bitcoin chart? There it is. And actually, we're going to start this first one here. We're going to look at, what's it called there? Oh my gosh, the CME. Jeez, oh whiz. It's been a heck of a day, guys. It's been a heck of a day. All right. So here we are. Let me get this up here. There we go. All right. Michael Johnson, what's up, man? You want to see Litecoin? Yeah, man. Litecoin, you guys know I've been talking about that since it was right around $50 in October of last year, I believe, right? And I said we're going to hit the 100, and we hit the 100, and now we've just kind of been bouncing around that. So, yeah, remind me here in a bit, and I'll jump on that too, okay? Bamboo agrees that Litecoin is so ready as well. Michael Johnson says, also highly highly recommend the what'd you say there? The $50 a month deal. So much content and things to learn, 100% worth it. I appreciate that, man. Yeah, guys, I'm going to tell you, you don't really understand how much content we have and how much we continue to put out every week, but you're not going to get through it in a month. You're just not. But you can, even if it was just a month, you can at least get started on the correct way of looking at things as far as trading goes and work your way from there. But why wouldn't you want to stick around here, right? Esteban, XLM USD. Remind me today, man. I'll see if I can jump on that, okay? So here is Bitcoin, right, with the CME. And so we've talked about this chart before, and this is the same chart I've had. Again, we had this same resistance support area, this purple here, which is what I said, that was the main area we wanted to break out of through. We did break out through it. We've just come back and basically touched this area, retested this area of support, right? Weekly pivot continues to hold this support here as well, just like it does on the spot pair. And I see a lot of people worried about this gap down here. Again, I'm not going to argue with people here. I'm just going to tell you that there are multiple kinds of gaps. This is what's known as a breakaway gap, okay? Breakaway gaps happen when you pop through resistance or support on heavy volume because it tends to tell you which way price is moving, the trend. And so you can see it's this right here. You see this big volume on this breakout, the resistance being this part right here. So we got that pop out and did that, got us going up there. I bring this up because breakaway gaps are the least likely to be filled, okay? Your common gaps, those things usually do. Runaway gaps can get filled. Exhaustion gaps are the most likely to get filled. Exhaustion gap would be like this one right up here. You see how you've got your trend all the way going up here, and then you have this little gap toward the top. That's why they're usually to get filled in. But your breakaway gaps, they often don't, more often than not. So if you're waiting, thinking that price has to get down here because it's a gap, you're doing it wrong, okay, guys? I wouldn't even try to worry so much about gaps. I think you just end up causing yourself a lot more pain trying to figure out, what's going to get filled and what's not than you do otherwise. But again, not here to argue about it, just telling you the way things are, guys. And so hopefully that resonates and you understand and you take something from that, okay? Let me see here. So that's what we kind of got there. Now, the count, here, right? So you have this low, right? Now, with Bitcoin spot, right? You had your terminal shakeout here, and then you had a lower low, a slightly lower low. With the CME futures, you had a higher low. But both counts are pretty much in that same area right now. It's the idea that we have a 1-2, 1-2 going on. Okay? And so, whether this is like a 1 with an ABC as a flat or a 1 with an ABC here, whatever, it's that idea, right? It's the idea that we've got off the bottom here, a 1-2, 1-2. And so at this point, the two counts are now aligned. They weren't over here at the bottom because, again, you had a higher low here on the CME. You had a lower low on spot. So, spot actually starts over here at the lowest low. And, of course, CME started back over here. But now, at this point, their counts are aligned. So what does that mean? Well, ultimately, what you're looking for is a breakout above kind of this area here. So if you want to be safe, on the CME here, you're looking to break out above 30,130. And that should indicate that wave 3 is in progress. Wave 3 has a minimum expected target of 44,685, which leads to the larger 1, 2, 3 minimum expected target of 49,120, which leads to a minimum expected wave 3, 4, 5 target at 56,000. And this is where everybody, go ahead and say you hate me. Go ahead and say I'm stupid. It's funny that you guys say that. Because again, it was only in 2019, the last actual, legitimate year-long bear market that we came out of, that we had something similar happen, that we had the strong move up, right? That wave 3, guys, at 49,120 is just barely, not even quite 3 times the length of wave 1. And so wave three we generally look for to be 1618, and then we look at 2618 as that real first extension. We're just above that. It's not like it's anything outwardly crazy as far as where it would be, right? But this is where what you don't know, that you don't know what you don't know. And if you don't know it, it can sound silly, it can sound absurd, almost absurd as it sounds for people to say we're still in a bear market right now. Okay? And again, that isn't a knock on somebody itself. It's just when you look at the prevailing evidence, right? It's hope for people who are trying to short. It's hope that it's still a bear market, that it's a bear market rally. But if you look, there is so much evidence that suggests the bottom's in, right? Whether you're looking at Wyckoff, or even you can look at Elliott wave, which has a much cleaner count than trying to stick it in and say there's some sort of big fourth wave, 100% rally going on right now, right? You can look at the 200 MA. I mean, you can look at it. Just there's so many different ways and so many different disciplines of trading that we do this, right? And by the way, one more time, guys, I'm going to say this because people just don't seem to understand, right? The generally accepted definition of a bull market is a rally that's at least 2 months long and is at least 20%. Not just 20%, but 20%, at least 20% over at least 2 months. Again, we're at 100% over almost 6 months now, okay? That doesn't mean you can't have another bear market, right? And a bear market would be the other way. It would be a 20% drawdown from the high, right? Over at least 2 months, okay? And in both of those, you have to have a preceding trend for a significant period of time. Now, there isn't anything that says, it has to be 6 months or a year or whatever, but think about it. If you're talking 2 months, a significant amount of time is probably 8 to 12 months, right? And we had a year-long decline. So we had our significant downtrend for a year. And since then, like I said, it's been almost 6 months and we rallied 100%. Now, this is not me saying, this is my opinion. This is in markets. This is the general definition that's held. This is the definition that the SEC holds. And whether you like Gensler and the SEC or not, that's irrelevant. What we're saying is a government entity, right, that polices a lot of what we do. That is their terminology. And so, you can be silly and say, well, it's the SEC and I hate Gensler and the SEC is a bunch of crooks and I'm not going to listen to them because of that, whatever. But that doesn't change anything, guys. You got to stop thinking your opinion matters. Okay? It really doesn't. This whole online social media thing, everybody thinks that just because they can say something, they should. People out there without any filters just being totally rude and ugly and disgusting to people. A lot of men doing that toward women and just treating them like crap online because they think it's okay. Man, guys, if you're doing that, I'm going to tell you right now, I don't want to know you. Feel free to leave. Don't ever come by again. I'm perfectly okay with that. Again, I'm a firm believer that the way we act in this world is what we're going to get out of it. It shows the world who we are. Character isn't built in times of adversity, right? Character is what shows in times of adversity. Character is what shows when you're given the choice to do something. Do you do it? That's where your character shows. Okay? So I honestly, guys, everything we're going to talk about today, I hope that point I just made is the one that hits home the deepest. I hope that's the one that sticks with you if you only have to pick one. Because again, guys, you are not going to get anywhere. You are not going to get successful the way you want to be successful in trading or anything if your attitude is that. If your attitude is, man, I got an opinion and it matters. And I'm going to treat people like crap. If that is the way that you live your life, honestly, I hope you change right now. I personally want nothing to do with you if that's the way you live your life. We choose the people we're around, guys. The people that are around you determine your success in life. That's part of it, right? It's really difficult to excel at something when you have people around you that are naysayers, that are telling you why you can't do it, that are telling you why you're stupid and why you shouldn't be doing it and how you're a dreamer. Dreamers are what get things done, guys. You cannot get good at trading unless you dream to be good to begin with. Then you have to put forth all that effort. And that effort is hard to put forth when the people around you are talking down at you about it. They don't get it. Find a new circle of people to be around. The internet makes that possible. So again, if you're choosing to be the douchebag online, right? And those are the kind of people you're hanging around, guess what? You're not going to get what you want out of life. You're not. And then you're going to complain and whine about how life is so unfair. I'm telling you guys, I had to work my butt off to get where I'm at today. So I'm telling you from experience, you can do it too. But these mindset things, these are things you have to overcome. And most people aren't willing to do that, okay? All right. Anyway. So, let me see here. WX3, I can't even say the rest of your thing there. Coming in from Australia at 2:45 a.m. Glad to have you checking in. Sorry, I'm talking a little bit more about mentality and stuff because honestly, that's the big stuff that makes a difference when you're a trader, guys. Not somebody posting a chart. Hopefully, you guys are figuring that out, right? Hopefully, you guys are figuring that out. Again, I can tell you all day long, but it's up to you to actually make, to make the effort to take the steps. You have to accept that what I'm saying is actually truthful rather than the way that you've been living life if it's been something different. I had to do it. Nobody could do it for me. So I'm here to tell you from experience, you have to be the one to do that, okay? I hope not many of those douchebags are here right now, but I get them every once in a while. But more so, it's a reminder to those who are here, or maybe those who are not even douchebags, but they're just kind of living life like this, right? Just kind of living life just there. And wondering why life isn't doing for them the things that they believe that it should be. You've got to do those things, guys. It's all up to you. It's completely up to you, 100%. Whether you can or you can't, whether you think you can or you think you can't, you're correct. Your mindset is what it's all about, not just in trading, but in life, okay? So, this is what I'm looking. So again, we've got this potential movement up here. Again, that gives us a wave 5 minimally up here around 56,000. So we'll see what happens here, right? First step right now is we need to kind of get this breakout above this 30,130 area here on the CME, right? That's the first thing we got to do. If this count is correct, 1, 2, 1, 2, we've pulled back 50% to a major area of support. And, everybody's like, oh, it has to fill in the gap down here. But nobody's saying, oh, well, there's support. This is like major support here. Support, resistance, right? This is a major freaking level right here. This weekly pivot is a major freaking level. Don't come at me and say, oh, it has to go down here if you're not going to sit here and say, oh, yeah, okay, well, there's actually a pretty strong level right there. Because what that tells me is you're blind, you're not paying attention, or you don't know. And all of those things are going to hurt you as a trader. Right? Bamboo says, our thoughts define us as human beings, no matter at what point in life you are. Exactly, guys. So again, looking for this rally to head up. So we'll see if we can get it there. You can probably drop you on a bear flag here, or a bull flag. You can see that we're hammering right around that descending channel, that descending flags EQ. So if we can pop out above that, usually we expect to rally to the descending channel resistance. If we can pop out impulsively above that, of course, that'll take us above the daily pivot there as well. And then we look to minimally get back up to where the channel started. And then again, that gets us above wave B. We should be looking to head up higher there, right? Let's see here. This is what we're looking at on the daily here. This is Coinbase, Bitcoin USDT on Coinbase, okay? I posted this on Twitter when it happened here on Friday. You have this great pin bar candle here, right? You have this swing low way over here back on March 27th. And then you have this breakdown on May 12th. So basically a month and a half later, bullish SFP, swing failure pattern, looking for a rally up. You can look at this as support. This becomes a spring. You look at the volume down here, right? So what are we looking for? We're looking for a pullback that gives us a higher low on lower volume. And this is your volume on that pullback. So we go from this volume on that spring to this volume on the pullback. Huge decrease in volume, because what that tells us is supply is not pushing down in this area. And instead we get the rally up. And so here we are at the daily S1 pivot, looking to move up again, minimally looking, or ultimately looking to get above this. Here it's $30,031 here on this particular chart. But yeah, again, you can drop in your the same. What do you got here? Bull flag going on here, right? In terms of channels, bull flags here. This quick wick down and move right back up is called a throw under, and usually it usually indicates the end of a trend. In this case, this pullback here, and you usually see a good move back up again toward the top of the pullback, and then breakout, get you toward the top of the decline, and then you break out there, and of course heading up higher. You can notice that your rally hit the EQ here, and so again, usually what we expect: rally up to the EQ, pull back, breakout on impulsively, large candle spread, large spike of volume, target the descending channel resistance, which on this chart actually happens to be right around where that daily pivot is. And usually this will get you, it'll get you 5 waves up. So you get a wave 1 up from the low, wave 2 on the pullback, and wave 3 is the impulsive breakout through the significant resistance there. So, again, these are steps we have to follow. I am not telling you right now that is definitely what it's going to do. You should go long right now, anything like that. What I'm telling you is this is the way you read the charts. This is what you're looking for. If all you're thinking about is it has to go to that CME gap fill, and you ignore the areas of support that I've talked about, which are significant, and then the structure of what we're looking at here, which is this bull flag, right? And you don't understand how these play out like I just explained it to you. Again, these are the things you need to pay attention to, because otherwise, if you're looking to go down, you're not going to get in when you go long, when it pops up and goes where you should be going long, right? You're going to continue to be looking for a reason to go lower. And you might jump in on some, but then it's going to turn around against you and come back up and kick you out, right? In the grand scheme of things, guys, the trend is ultimately up, right? Like I said, almost 6 months. The trend is up. This is a pullback. This is a lot of overlap. Volume is dying off, right? On pullbacks, that's what you see. You usually see a lot of overlap, smaller candles, and volume dies off because there's a lack of selling it pushing lower and lower and lower, right? Right here, look at how the volume dies off on this one until you start to get to this area where then it starts building up a bit. But even there, it's still just barely getting to this other area where it was at the top, right? But for most of this, volume's just dying off. Overlap, right? Even on this big drop here, boom, and then you go up. So things that you want to kind of pay attention to, right? Let me see here. Let me see here. Kind of catch up with you. Let me see. Okay. Let me kind of catch up with you. Genghis, what's up, man? I see you checking in. Let's see. Okay, so that's kind of where we're at with Bitcoin there, guys. Let's jump to a different chart here. Let's look at the dollar here, right? Or the DXY. Now, again, my thought is that this is probably wave 1 and this is a wave 2. So you get an ABC, ABC, and we're looking for 5 up here. It's a flat, okay? So if it's a flat, we've hit the 38.2. If we break out higher here, we'll look at the 50% right around 103.15 and a half, which as you can see here, pay attention to where it's at. So we got rejected right here in the low volume node, pulled back to the higher volume node, and now we're trying to, but we haven't broken out higher yet. If we do, we'll get up into the next one, and 50% gets us again in the low volume node. We should get rejected there, right? That's that whole support area there. Every time it hits there, it gets rejected, right? Just about. So if we break out higher, that's going to be my initial target there. And then, of course, if we go up, we'll be looking up here around the 61.8 to 70.5 area, 103.79.5 to 104.265. But if we can get rejected, especially if we get rejected prior to this swing high and we drop down impulsively below this hourly pivot, right around 101.975. If we can drop down impulsively through that and close below it, that's going to hint that the top is in. And then we're going to want to see us break down below this swing low here at 101, and then this swing low right here at 100.52. Those would be your targets on the way down. If we get through that, well, all of a sudden we get a 1 and then 2, wherever it happens to be here. It'll get us 3 down, and we'll start looking again toward that weekly S1 pivot area, which is really kind of down here around that 93.68 on that. Some people at the time had talked about this being an inverted head and shoulders. This is the low down here that I was talking about earlier. When I talked about that was the low there. And so, they're kind of like looking at this. Again, I'm not a real big fan of patterns like this, guys, but here's something you can look at. If you feel that's what was going on here, right? Can I get this up here? All right. So this then becomes your breakout, right? And it pulled back into that breakout, and then it shoved off, okay? Now, if you're looking, again, we've looked at this more than a few times. If you're looking at the idea that maybe this is a head and shoulders here, right? I can't get it there. Boom. And here, and there, and here. Well, essentially, you're looking at potentially the same thing, right? You pull back, and then you broke out, right? You pull up, and then you break down. So, I mean, that could still be happening there, so we'll have to see what happens. The weekly kind of popped out, just barely an oversold here, popped up. But, of course, RSI itself is nowhere near oversold. So, again, kind of thinking if there's going to be a major reversal, we kind of think it would need to be much closer than where we are. But maybe not. But, we'll see what happens here. If we just continue rallying through all this, of course, I'm looking for resistance right around this weekly pivot, which is around 104.225, up to this swing high up here, which is 105.5. So this kind of, well, actually, I guess it would be a little bit higher here. This swing high up here at 105.87. I would look for that to hold as resistance. This kind of area here, if price was to get up there. Again, this kind of count is a little bit of a pain in the rear end. So, locally here, it does look like 5 waves down, but it is a dip below the swing. Could be a bigger move up, but we got to see some movement through these levels, guys, in order to really look and say it's got to, do that, right? Let me see here. Okay, so that is the Dixie. Let me see here. This monthly look at oil, I find really compelling here right now. So you can see that from this high up here, right, coming down, you had volume. I mean, you had a little bit of bounce here as it went up to this swing high here, right? And then it went up, and then it dropped as it kind of came down, and then it popped back up as we went up to that secondary high there. It pulled back. But generally what you're seeing is volumes dropping off this entire decline, right? Until it hits this one right here. And so right here at this demand structure EQ right here on the monthly, right? You get this huge pin bar candle here. And that's on a spike of volume, which again tells you had the attempt to send it below with supply, and the market showed up and said, I don't think so. Market showed up in spades and almost flipped that monthly candle. So now we rallied up and we pulled back. So now we're on the next month here, right? It's the 16th. So far, volume is a lot less than where we were. And we're getting a good wick here. We've pulled up above this kind of support area. So what we want to see is, do we get this continued push up? And does this volume stay lower than what we had here, right? Because this is just a slightly bit lower here, right? So your low here was 64.36 and your low here was 63.64. So you're putting that slightly lower low on much less volume so far. So we want to see, how does the monthly close here in terms of that candle spread and that volume. If we can break out through this descending resistance, there's no reason why we shouldn't be looking to get right up here around $90, $93. Okay. If we can impulsively break out above this weekly monthly pivot right here at about 93, almost $94, I think then you're looking up here around this R1 pivot, which will get us right around 100 and what are there? 117. So I think there's a play for the upside if a few things happen, but they have to happen, right? We're looking for, okay, what's the market telling us at the moment? And then we're looking to say, okay, what does it end up telling us, right? What's going on, Fibbo? Good to see you checking in, man. So yeah, I think there's definitely a possible play for oil here, but I want to see how this monthly turns out. The weekly, let's zoom it in there a bit. I mean, the weekly doesn't look terrible, coming off there. Again, you've got just around the same bit of volume as you had at your swing low here, but you have a large lower wick spread up here. So it's real iffy around that area as far as is that okay or not. As you can see, we rallied up and closed back above this level here. And then we're kind of came down the next week. Excuse me, the hiccups here. And then this week we're trying to break out. We want to break out higher, but RSI is just on the bearish side of neutral. But it's been basically going sideways here, guys, since October of last year, right? Since we had this kind of point right here, since we've kind of come down, RSI has continued to remain neutral. Or just shy of neutral. It's in this channel, this sideways channel kind of thing. But Stochc RSI is getting interesting. It's right now about that same level we've had support last two times we've been down here in December and then again in March. And so we'll look and see. We're starting to curl up a bit here. Do we get that cross and we can rally up, or do we head a little bit further down into oversold and then potentially look for a reversal on that? If we happen to lose this. Oh, man, if we're kind of losing this 61.5 area here, I think there's a really big chance that we test this S1 pivot on the weekly here right around 56.80. If we lose that, I mean, then you're looking at a move down. I mean, there's no two ways about it. As we get in information here, you can kind of see where that higher volume node stuff is, right? Now you can dip down here maybe. Well, I guess you'd probably hit this kind of 55 area. Maybe you wick down into that 55 and then you pop up if you're getting down there. But once you start getting into, 53 here and you're getting into all this liquidity, the further you push into that, the more it starts working as resistance, pushing you down rather than support. Your support is at the beginning there. But as you're pushing your way through it, you're starting to get more and more on top of you, continuing to push you down and less on the bottom, holding you up. And so, you could potentially, once you're breaking down through that 45.5, actually start looking down here, at 36 or even 33 in that area. But right now, I think we're constructive. I think there's a potential for us to rally up through there. Could be a double bottom right here. But in order for that to be a double bottom, you have to break out above the swing high here at 83.53. And if we do, if you want to use that as a double bottom, the pattern target gets you up there right around 108, almost 109. But potential double bottom, it has to break out above the swing high to confirm it. Until then, it's just a potential. Okay, guys? All right. Let me see here. What else do we have? We've got gold. Nothing's really changed on gold. We're getting a pullback right now. Remember, we talked about the possibility that maybe we're getting like a 1, 2, 3, 4, 5 up here to finish wave 1. And if so, likely looking for a pullback down here toward, but basically toward the weekly pivot, maybe a little bit under to get this wave 4 swing low area. So potentially 1811 to 1841. But man, if we get that, look for a reversal, guys. Look for a reversal. And then that gets us a minimum expected wave 3 up there at 25.75. Minimum expected, guys. How's that make you feel? Natural gas. Let me see here. Let me take a look at that here. Let me get through silver, and then we'll see what I've got on natural gas. See if I've got anything. Silver. We've got this resistance coming here from April of 2011 down through here. Remember, we were looking for a potential move down toward $8 or so, but this constructiveness on this rally here suggests that we probably won't get that. And so we've kind of changed the idea that maybe we've got 1, 2, 3, 4, 5 here, and then A, B, C. So if that's the case, we need a breakout above wave B at 27.495. If we can get that, that will add confidence to the count. That gives us a minimum expected wave 3 target up there near that all-time high at $47.86. What I would like to see here, and I'm not necessarily a huge fan of this resistance, but what I would prefer to see here, I don't know. I mean, I guess we could maybe dip down on the weekly or monthly here to right 21.89. That would give us a 50% pullback here. That would suggest we've got like a 1, 2, 3, 4, 5. My preference would be to hit that R1 pivot, because then get 5 up there. We break out just above wave B. This is the way it usually works. We're near the swing high. Again, what it usually works. And then wave 2 will usually pull back to the 50% area. So maybe it's possible this is 1, 2, and then 1, 2, 3. Well, let me see here. 1, 2, and then 1, 2, 3, 4, 5, right? So maybe it's 1, 2, 3. We get a 4 to the pullback, 5 up to the R1. Then that gives us 1 up there, pull back to the $23 area there again, $22.94, to get 4 or to get 2 on our pullback, and then 3 of 3 here, breaking out through that. So I think there's still, kind of like gold. It's is it done yet, or does it have a little bit further to go up and then pull back? But in either case, I would normally look for price to pull back to the weekly pivot. And then at that point, I would be looking, if I want to go long, I'd be looking for a reason to go long around that area. Look for something happening in price action and volume and indicators or whatever, whether it's bullish divergence, hidden bullish divergence, pin bar candle at the low, at support there, large volume on that candle at the bottom, kind of idea showing a reversal coming in. Let me see here. See if I find it. It would be with my newsletter ones. Almost about ready to get that newsletter kicked back off again, guys. So if you're subscribed to that, again, it will be very soon, finally. We've just had so much that we've been doing with what we're doing with TWC that I needed to concentrate on that, but we will be back. themarketbreakdown.substack.com. themarketbreakdown.substack.com. Okay, guys? What do we got going on here? Man. So I'm going to tell you what right now. You like to see, this is the weekly. You like to see that support on the S1 pivot, but you don't like to see the way in which Stochh RSI here is rallied up, from these kind of lows down here, from this area here, as you've kind of gone sideways. It's really kind of broken out about there, and I don't like that. See if we can zoom into the daily. I mean, this is just a lot of sideways here. You had your bullish divergence at the low. Boom, rallied up, so that was nice. Printed a bullish SFP here on the low, on the swing low. It's rallied back up into the resistance area, which is what you would expect. Right here. Gets rejected, comes back. Here we go trying again. If I'm looking at this, it looks like we can get a 1, 2, 3, 4, 5 as a leading diagonal. Try this again. So basically just right there. Support running you off kind of right here. And then back. And then, you're getting 1, 2, 3, 4. You would expect to get one more push higher. So Um, yeah, yeah. Because this is a lower low over here. Now it's possible. It's possible this could maybe be like an ABC, and so this is an ABC here. So ABC, ABC, and then you're 1, 2, 3, 4, 5, getting up here into the threes or the mid threes, maybe even as an expanded flat before it drops back down. That would end up being a crazy, crazy kind of crash in that, wouldn't it? If this is 1, 2 right here, I would be looking for it to at least kind of target this $3.20 area. Yeah, because that would potentially give us then 1, 2, 3, 4, 5 up there. And then I'd watch because again, this looks like this could be ABC and then A, B, C here. So that gives us A up as a 3, B down as 3. So then you look for 5 up as a flat for C there, right? Now, the other possibility is that this could also be a triangle, right? So you would go 3 up as A, 3 down as B, A, B, C would be C, right? And then D and E, and then you get a breakdown. So what you're looking for is, first thing you look for is, can you break out above this swing high? If you do you get 5 waves up that stop prior to this swing high? So all of a sudden it starts looking like, you get this A, B, C, or WXY, or whatever, C, D, E, maybe as a triangle here, and then we break down. But if this is a triangle here, that would be a wave 4, and so we would just have, generally our target based on the height here, if we got that, would be around $1.28. But all we would need to see is 5 waves down after the triangle completes, 5 waves down below the swing low. That's all we would need to see. And sometimes you get that. Sometimes you just get a sharp drop that prints right below here, prints another bullish SFP, right? It would just be under this one. Dips down and then boom, takes off back up. But yeah, I mean, to me, my first thought is, especially with the weekly looking like it is on that Stochc RSI, potentially a flat or a triangle for like a wave 4. And then maybe we get that last move down and then we look for that rally up there. That's the way I'm looking at it right now. We'll see how it evolves. Let me see. Yeah, we'll see how that works out. We'll see if we can actually get a triangle in it, or if we break out higher, which would give us then the possibility that we've got A, B, and C as a flat. And if we keep on going up through that $3.20 area, it starts adding a lot of confidence to the idea that maybe this is actually the bottom here. Maybe this is 1, 2, 3, 4, 5, with just a very slight wave 5, right? So this would be wave 3. This would be wave 4. This would be wave 5, just dipping just below. And then this is wave 1 heading up. But even if this is wave 1 heading up on that, you're still going to get that same $3.20 area target. The question then just becomes, are you pulling back in 3 and then breaking out higher? Or are you continuing to consolidate? In which case, then we'll look at it as a triangle. Let me see here. What else I got here for you guys? What else I got? You guys were asking about something. What were you asking about? LTC, right? LTC was one of them. Let me see if I got something from my newsletter section, because those are my longer term charts, which shows you things a little bit better there. Yeah, there we go. Man, look at. Oh man, let's take a look at Litecoin, Bitcoin here first. Man, oh man, look at that. So the first thing I noticed right here, bullish SFP rallying up. We've rallied up into the target now, which is this congestion area. This was a bullish divergence here at the swing low that led to that. So if you were paying attention to that, you might have seen that. Let's see. Okay. And so basically this is a range. Now, as a range, you've got volume dropping off as you got all this overlap coming down here. I mean, to me, it looks like it could be, this could be a spring. There's that nice reaction off that you look for. So the idea would be this move maybe up toward the pivot, the pullback, and then the breakout of the pivot. This looks like potentially A, B, C here. This one is much more what that would be there. So I guess that probably couldn't be an ABC there. This is not any fun, right? If I look at this, my first thought is 1, 2, and then 1, 2, 3, 4, 5. So it would be an ABC. Where are we actually getting in here? See, it's just wicks on wicks. You've got this overlap here with these wicks, and that's where things start looking kind of interesting. Can we potentially get like a 1, 2, 3, 4, 5 out of this? That's what I'm looking at. You'd have to try a bit here, but I mean, you could do something like maybe 1, 2, and then 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, small 4 here, 5. I'm not really happy with that overall. So you kind of need to be careful with that. If we're looking here, well, no, this won't be a triangle because you got a lower low there. Range up here. I mean, we got some room to run here. If we're going to break out, I mean, you can look up here toward 0.00384 kind of area or 383 kind of area. That's where I would look for initial target if we're breaking out through the swing high. The weekly suggests there's a good chance here, but again, you're going to want to see an impulsive breakout above that weekly pivot. No doubt about it. You want to see a big candle spread, big spike of volume through that to confirm that you're kind of going through that, right? But the fact that we just straight on drop down through it, we didn't test it, bounce, and then drop through it, we just kind of dropped through it, suggests that we would probably hit it to retest it, pull back, and then break out. Again, just things that price action normally does when you're looking at, right? Let me see here. You have a new bull zone there on natural gas there, Fibbo? All right, we'll look at Litecoin against the dollar here, and then Esteban was looking for XLM versus USD, so we'll look at that as well. By the way, guys, Fibbo says he's going to be with me this Friday on this Friday show, so you know how much fun that is. Show up, guys. Don't forget, tomorrow morning at 8:30 a.m. Central Standard Time, 9:30 a.m. Eastern Standard Time, Scott and I will have our show on his channel, so make sure you guys are looking for that as well, all right? So my first thought when I look at this is this right here. Of course, what that means is you basically have this kind of range thing going on here. Okay. And so got a range here. Man, that monthly on Litecoin. I mean, if we look at that, it looks like 1, 2, 3, 4, 5. I mean, so that could be 1, 2, 1, 2, get ready to push up higher. That monthly, weekly pivot there continues to hold this support, long wicks. Now, this is interesting. You have this long demand wick, then you have this large supply wick, and then this long demand wick with those 3 candles in a row there. So you got a lot of fighting between, your support and your resistance. Basically, you're looking at this area right here, and then you're looking at this area kind of right here. What does that weekly look like? I like that. You can see here the weekly Stochc RSI is reset down and oversold, threatening to cross bullishly. No bullish divergence here on RSI, but this looks like ABC. It looks like ABC. It looks like ABC. I don't know. Is this maybe going to be a triangle here? Let's zoom in a bit more. Yeah, that might end up being a triangle in this area because it does look like ABC, ABC, ABC here. Though I don't know. You know what? Looking at the daily, you've got 1, 2, and then you got 1, 2, 3, 4. Is that 5? I think this is lower actually. 95.80 is the swing. 95.97 is the swing there. Again, potentially could be a 1, 2, and then a 1, 2, 3, 4. 1, 2, 3, 4, 5 maybe. And then you have an A, a B, and a C here. But this gets us a 1, 2, and then a 1, 2 here heading up. So we would look for an impulsive breakup here. And if we get that at the daily pivot there, we should be looking right up here around the swing high stuff, right around the R1 pivot. If this is a 1, 2, again, this would be a 1, 2, 3, 4, 5, gives us 3, 4, 5. Yeah, I would expect to get like a 1, 2 here, and then a 3 on the breakout, pull back to 4 at the pivot, 5 up toward this R1 pivot area, and then I'd look for that to be a 1, and then a 2 back to the pivot should give us that 50. It's going to have to break out higher. We're going to have to get a bit more overextension. We'll have to look at the R2 pivot. If we can get up toward that R2 pivot, potentially get a pullback to that pivot, continues to hold its support, then we'll look at on there. Right now, it's just range bound right now. Let me see here. We have our bigger range. Yeah, our bigger range here. I like the weekly. I like that doji candle there at the low. And then we got this nice bullish engulfing breaking out above that weekly pivot. But we are really just kind of range bound in this area right here. And so what we're really looking for is impulsive breakout above that. If we can do that, I think on the weekly, you're looking at least at the R1 pivot, which would get you around 136. But if you're getting that, I think at that point, if you're pulling back, it's just a pullback, and then you're heading up higher there. If this is a triangle here, if this is A, B, C, we get a D and then an E. If we happen to get that here, guys, we're continuing that consolidation. I mean, yeah, look, it's almost that R1 pivot, $130, $130.20. Right here at this other resistance is where we'd be looking for that's the pattern target on that. And again, that gets us a 50% right around the weekly pivot, which would be the triangle. And usually if you have a triangle, when price breaks out, when it pulls back, you usually find support in that triangle. Why? Because the triangle is it's a base. It's just overlapping price action. It builds demand. If you're above it in that area, it builds supply if you're above or below it in that area. I wouldn't turn off the wicks if you're trying to look for patterns. Yeah, no. Because the wicks are part of the price action, right? So you don't want to turn off the wicks if you're looking for a pattern, if you're looking for some kind of diagonal or triangle or something like that. You don't want to turn off the wicks. You want to make sure you incorporate all that price action. I'm a very, very firm believer in that there's so much extra information in those wicks. Again, think about what we talk about all the time when we're talking about price action and volume and looking at the way that the candlesticks end up in relation to other candlesticks and their volume and price action, right? Oh, there's a lot of information in those wicks. I would not suggest anybody ever turn them off doing anything. There's just too much information in it. Let me see here. XLM USD. Let make a copy here. It's been a long time since I've looked up XLM. Man, I have not traded XLM since, geez, oh whiz. Since, gosh, I don't think I've really traded it since the last quarter there of 2017. Wow. Yeah, I think it's actually been that long since I've traded them because it was just crazy to trade it back then. That was one pair that we were just having so much fun with. We had a lot of trade setups that we posted back then about that. Let's see, what are we looking at here? So if I didn't trade it back then, oh my gosh, how far back was that? Yeah, I missed that rally up there with it, didn't touch it. Yeah, this was the last kind of time that we were trading it back over here. There was just so much great movement at that point. Let me zoom out a little bit further here. So, I mean, if we look at this, so it looks like we've got 1, 2, and then we've got 1, 2, 3, 4, 5. So 1, 2, 3, 4, maybe 1, 2, 3, 4, 5, heading up for 5. I don't. I think it's probably better. I don't think it's 1, 2, 3, 4, 5 here as a leading diagonal, right? I don't think so. But yeah, I mean, it certainly looks like we got 1, 2, 3, 4, 5 here. And then maybe A, B, 1, 2, 3, 4, 5. Pull back. Yeah, good pullback. Locally here, again, this just looks like 3 up. Just looks like 3 up. Let me zoom in a little bit. Could be, okay. So you're going to get what looks to be 1, 2, 3, 4, 5 as a leading diagonal. And then you get your A, B, C. This could be A, B, 1, 2, 3, 4, 5 is C here. And then you're just looking for a running flat. You would get a 1, 2, 3, 4, 5. You can see that we're just about to hit oversold here on the daily RSI. We're right around the daily S1 pivot. I mean, for me, my initial thought is, let's see here, 2. I think that might be a flag going on there without taking a whole bunch of time to look at it and delve into it. But that would be a running flat if it is. And so we'd look for a rejection around this S1 pivot. You could probably look for an impulsive breakout above that line to suggest that maybe wave 2 may be complete, like hint that it may be complete. But you want to see an impulsive breakout. You want to see large candle spread, large volume here on the daily, breaking out above that. And initially, you're going to be careful that you can get through this area here, right here around that 94 area, 0.094. But if you can do that, you should break out impulsively above the daily pivot, and that really just kind of sets up everything. So if we're right here, this could be a flat. I don't know. This could be one here. But if this is one, it's. I think it's this actually. If I'm zooming in here, it looks like maybe it's this here. And so we'll just change these down a degree here. And then the idea that maybe we've got a 1-2 right here. So it'd be like A, B, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5, 3, 4, or 5. Yeah. So I think we may be actually looking at that. So that's going to give us a real over. I don't know. That could actually be 3 right there. You see how that 1618's right there at it? Well, that's going to raise it up a bit there. Yeah, we'll go with 1, 2, 1, 2 here right now. And so that's going to give us an overextended wave circle 3 if we're doing that. If we reach that S1 pivot, that'll give us minimum expected. What is this? 0.156435. 56435. Okay. And that would be just that 3 of 3 kind of thing moving in there, which would give us this actual 3 up here around 0.17. Yeah, I think that might work. 4 here, or 5 of 3 up there at around 0.1732 minimally. Of course, if wave 3 overextends more so than what it's already potentially doing in this, then we'd look higher. But that would give us 5 waves up right into support. See this resistance support area right here? You get to 3 at the low volume node, get rejected, come back toward that higher volume node area, and then break up toward the higher volume node. Yeah. I think maybe we've got a 1, 2, 1, 2 going on there. If you break down below wave circle 2 here, then it's not. But if you break out, again, descending resistance here, impulsive breakout above that, hints that wave 2 may be complete. Breaking out impulsively above the daily pivot, and then especially this little bit swing high, just a bit higher here, is really going to add confidence to that count, that R1 pivot area. And then again, you're looking for that 3 and then that 3 heading up there. Does that make sense? So that's kind of where we're looking at that right now. But that's just, again, locally, charting locally here off the lows here on the daily chart. It's got a lot of room here it could run overall. The all-time high was up here at around almost 80 cents. I don't know that we get that at some point, but we've definitely got a lot of possibility here on the movement. So we'll see if we can get, we really want to see if we can get you can see we're at the high volume node here. You want to see this area hold this support, because as you fall under it, remember, this becomes supply in this area instead of demand. So it makes it harder to break back out. But that daily is looking ready to reset. We're right around the daily S1 pivot. We're right at the high volume node. I'd look to see if we can get an impulsive reaction off that. Head off there, all right? So there we go, guys. That'll do it. Another day. Some more life lessons. Some more charts. We'll see what kind of responses I get. Don't forget, guys, follow me, TX West Capital on Twitter, Texas West Capital pretty much everywhere else, Twitch, YouTube, Instagram, Facebook. Don't forget, let me know if you're interested. You can just comment or send me a reply or something on Twitter. Let me know you're interested in the challenge. Again, that's going to be 5 days. We'll spend probably about an hour a day learning about trading, learning the things that you need to know. It's free, but it is going to be limited in space because these rooms only hold so much. Other than that, join us at TexasWest.capital. Use the code ELITECDMM. You can see it there on your screen. Again, if you do that, that will get you $50 a month for the first 3 months instead of $200. Cancel at any time. Do that. Jump in there. Get you a whole bunch of education. That's what we do, guys. We educate. That's what we are. We're not a paid group. We're not all this other nonsense. We got a community of like-minded traders in there that are absolutely fantastic. You guys Man, I can't talk about Bamboo enough. It's really just, man, his game has just been amazing the last few weeks. And we've got others as well. They're just not on the stream at the moment. So join us in there. We'd love to have you there. If you do join, by the way, pay attention to the instructions. You got to get a hold of me so I can give you access to the lifetime access to the 2 foundation courses. One is Traders Foundations. The other one's Elliott Wave and Wyckoff Foundation courses. And then that way we can do that. That's on another platform at TexasWestCapital.com. But you want to go to TexasWest.capital to get the membership in there, okay? So that's it. Mr. Fraser, Soren, I see you guys there. Alexandra, good to see you. Hank as well, Bamboo, Data, Andrew Bennett, everybody. Really appreciate you guys checking in. As always, remember, the only thing you control in the market is how much you lose. That's it, guys. At the end of the day, the most important thing you're going to do day in and day out as a trader is your risk management. So what do you think you should spend most of your time figuring out, especially at first? I'm still doing it, guys. Almost 3 decades later, I'm still doing it. It's still the most important part of my trading. So if that's the case, hopefully that gets you to go, yeah, well, then you should make it the most important part of yours. Because you're going to make a lot of mistakes at the beginning, guys, but you want to be able to weather those mistakes. And you can't do it if you're gung-ho, YOLO every time into every trade, right? Proper risk management. All right, guys, that's it. Hopefully we'll see you all over in Discord. If not, say hi to me on Twitter there or anywhere else you see us. And other than that, I'll be back on Friday, 11 a.m. Central Standard Time to do this again. Vibhaswani will be my guest. And, of course, like I said, tomorrow morning, 8:30 a.m. Central Standard Time, 9:30 a.m. Eastern on Scott Melker. You can go at Scott Melker, the Wolf of Wall Street's, his show. You know, I co-host that Wednesday show with him. And we'll be talking more about trading and charts and stuff. There it is. I hope you guys have an absolutely amazing week. Y'all trade safe, and I will see you then, all right? Take care.